What's going on, guys? Welcome on in. We are live back. We are back for another stream. Just taking a peek at what's going on right now. Speaking of the earnings from yesterday that we left off with were Nvidia earnings yesterday, and the stock. Well, it's kind of an interesting move. I guess we should pull it up and look at it. Let's do that here. So. We were talking about this zone, which was kind of like the low of the week, right? This was back on Monday's lows, and we kind of came down, hit that low, and then bounced up. What you kind of have right now is like we did hit all-time highs at the open, it looks like the first 5 minutes of the day. Nvidia, well, from last night or overnight hours into pre-market, we kind of just grinded up and came up from the 140 area all the way up to 150 pretty much and made a new all-time high. I got an alert going off. We'll take a peek at that in a second. Made a new all-time high at just shy of 153. And then now it's up on the day, which is funny because the reaction initially yesterday was not positive. It seemed as if as we we had a decent dip down, then it bounced back, but then it couldn't get moving up. And it just kind of rolled over and was down a few percent in the overnight going to bed, kind of the situation. And then it kind of gaps up this morning and has its move at the open. So a new all-time high is hit on Nvidia. It's not sitting at one right now, technically speaking, but it did hit a new all-time high today, which is kind of funny when you look at the bigger picture here, right? What did I just do? Oh, yeah, Tesla. We're looking at Tesla now. That's because this chart looks kind of interesting to me. It's like, you got a spot right here. Could be setting up for a break of the 1 or the 348s. Break that, and I think you got a decent shot for an all-time, well, not an all-time high test. All-time high is like 400 plus, I think. We're up in that ballpark. We're not there yet. We're like $50 away. A high of the year test, which is around 358. So about a $10 move to test that high. We'll see if we can, get that. But that's kind of the consolidation you really have on Tesla. It's honestly worth a trade in my book. It just depends upon if I'll get the setup and the time frames I'll trade it on, and we'll see what we got. But we'll see how that goes today. I guess I should put an alert on that level. Mark it up right here. I'll toss an alert there just so that we are aware of it if we're not looking at it at the time. Let's just go through the rest of these guys. We got Netflix is still pushing, or it's down today, but it's been having an incredible past couple of days, past couple of weeks, to be honest. Apple, funny enough, just like not really doing much, pretty quiet. You seemingly are in a situation on this where it's like that trend line breaks. You probably have a decent red day, but if it doesn't break, then it's just going to keep grinding. You're waiting for it to have a green day. The thing is, it's getting up into an area of, this is all-time highs up here. So it's like this is going to be an area, if it breaks that upper 230s, like it could have a nice push. Apple historically, the past, 2 years or so, has not been the best breakout candidate, at least from what I have seen, from what I have experienced. But that's also just me. So nothing against Apple. It's just like I haven't traded Apple in a while for that reason. Google is getting destroyed today. It's down 4.5%. Really just off. It did gap down a little bit, but really off the open, huge move down. U.S. Department of Justice has urged Google to end its default search deal with Apple, which could significantly impact revenue. Okay, cool. So that's why, maybe, part of it. When you get news like that, you never know what can happen. Let me just reset my shit over here. I have an old my old Mac from 2016 that I got before I went to college, or when I was in college. Still runs, just the battery doesn't work, so it has to be plugged in all the time. But she still gets her job done. So I throw up just charts of the S&P, just so I have a sense of what's going on. And let's see, oil's up a decent bit today. Oil ran off that low is not super surprising to me because this has been an area of really, it's bounced a lot right here. So I think, if we put in a lower high and roll over, then yeah, obviously the pressure is on for that level. But until that happens, she just keeps is bouncing off that zone so far. The 10 years down about 0.6 today. This is not crazy yet. I want to see this line break to get more interested in oh, wow, the 10 years coming down. But I'm not trading off of that really. It's just the correlations have not seemed to, they were pretty good for a while a couple years ago, and then they haven't been as good the past, year or two. in terms of like what that means, you know? Oh, the 10-year going down is great for small caps. Like, it's like, yeah, it kind of was the idea, but then it's like not really because it hasn't panned out that way perfectly that much this year. Yeah, generally speaking, lower rates probably better for them, generally speaking, but, you know. I mean, today, I guess the correlation's kind of there with the Russell is up 0.5, the 10 years down, you know, and everything else is kind of flat-ish. But the Russell, hear me out. Like, I mean, I'm not a dip buyer type of guy, but if you are from a trading perspective, it still is. It's still there. I mean, you can still like look at that and say, yeah, valid. If I did, you know, just off the top of my head, how would I maybe even strategize around that? My idea would probably be, okay, we broke out. If I don't play the breakout, I want to see a retest. And we came back, we retested, you know, this area that clearly was an area of resistance, you know, if simple as that. You came back into it, you got a nice lower wick, so you tested it, and then you're showing strength bouncing up off of it. So it's like an entry here, stop under that wick would be invalidation of this bounce of the retest and go. And then target would be, I would probably look for a target above these highs. You know, it probably would need to be there anyway, because that would be like, if you do the math on that, let's do the math on that. Yeah, that would be about a 1.5, 1.6 to 1 if you target those highs. So 2 to 1 would be just above those highs, you know, as a rough idea. I don't trade that way, but hey, if you do, you know, then that's the setup and that's on the swing trade basis. It's like a daily time frame. Maybe it's an idea. Crypto or options. I mostly will trade shares, and mostly, I mean, I've actually traded Bitcoin quite a bit this month, but I mostly trade stocks. I want to say I prefer stocks. There's usually more setups in the stock world for me. This setup was kind of there for Bitcoin. I did not trade it, but it technically was there. It wasn't as clean as I wanted it to be for how I see it and for how I, you know, take the breakouts. But kind of it's working, you know. I probably would need to see a push towards 100K, which we did hit 98K. So it's getting pretty close. I would imagine you're going to get some reactions there. I think 100K is probably going to happen here soon. Then the question becomes what happens at 100K, huge reaction or not? Like, do we get a massive, you know, what the hell goes on, you know, at that point? What's going on, Peter? Good to see you too, man. Yeah, that's the story. I mean, it's like Bitcoin making some pretty big moves. NVIDIA with the earnings, those are pretty big stories. Snowflake is another one of those stories I guess we haven't really talked about, but we talked about it yesterday on the live stream on the earnings. This is crushing it. It's up 30% today. They had a great earnings apparently, where the reaction to it is great. So now humongous gap up. Snowflake's one of those stocks that I was kind of surprised to see. I don't follow like a lot of the fundamentals. I'm much more of just charts, but I was kind of surprised to see how bad it has done this year. And like how, despite how strong the market has been, I'm like, wow, that's pretty tough to see. But obviously now, if you were one to say, hey, I like Snowflake long term, and you were buying into this dip this year, you know, you're obviously looking really nice right now. You're up 30% in a day. It's like, oh shit, that's awesome. But that's kind of how it goes. And, you know, then you can have earnings where you're down, like, you know, so you would have had to, if you were holding for the past couple of years, well, then you would have been through all of this, you know. So it's like, yeah, it's up, but it's like, you know, how much is it really up compared to maybe where you were buying in, you know, over the years and what your average might be? It depends. But also, if you were dollar cost averaging, you know, you're getting your average down the past couple of months, past year, you're getting your average down. Simple as that. So your average comes down nicely, it goes up, and now you're like, oh shoot, now I'm, you know, closer to break even if I had been buying all the way back up in here, you know. That's how the dollar cost average game works. Stupidly simple, but now NVIDIA's down 1%. It's going to probably be pretty volatile today. The thing is, I think about this one is that the ultimate screw job is for any option buyers, puts or calls. You know, you kind of had the initial move down was like, oh shoot, puts, holy crap, tomorrow could be a big day for puts. And then like for anyone who had bought puts prior, like, oh my God, like, you know, people who play the earnings like that. And then it was like at the open, holy shit, calls. And then you kind of, it's funny how we are right where we pretty much ended the day yesterday, like right smack in the middle of the range, right back to like nothing has happened. And that's a Thursday. You got to be concerned about that, because if you have Friday options, then you're like, what do I do? Do I get out? And we saw what happened last earnings where it had a huge move the day after, well, the Monday after the week of its earnings. So it has earnings Wednesday, Thursday, Friday, It moves down a bit Thursday, comes back up a bit Friday, and then Monday, huge move down. So anyone who played puts, you didn't get a big enough move on that Thursday, Friday for you to make money. So your puts go worthless, or the theta decay crushes you, or really the option decay in general just crushes you. And then you now wake up Monday, you're like, oh my God, it went to where I thought it could go, yada, yada. That's just how the game goes. Hence, the options is even more of a crapshoot than if you're going to play shares during an earnings. Like if you're going to play earnings, you're better off just buying shares than you are buying options, because there's so many more ways to lose with options. Whereas like shares, if you're right, you're right. If you're wrong, you're wrong. That's it. It's simple as that. It's not like, well, the stock didn't move, so technically I wasn't that wrong or I wasn't that right, but I also lost all my money. Like that's what happens in options, and that's on earnings. So that sucks. So if you ever, I'm sure people do it. I haven't seen very many very substantially consistent success stories of people playing earnings as like a strategy and continuing to make money like throughout a longer period of time. But you could do it. I'm sure people who do it. I'm sure there's a strategy there. No one really maybe talks about it, but I'm sure someone's got it. Maybe some hedge funds got it figured out. Probably. Let me check on my two positions right now. I'm cruising, and I don't know what's BX, Blackstone. I'm cruising, and I got the Blackstone out. We're grilling some burgers, even though that's completely unrelated company. CCL, yeah, it looks good to me. I mean, the invalidation here would simply be the break below this breakout candle. Not a massive breakout. I mean, it was a massive candle with a bullish engulfing. You can say, oh yeah, it looks really good. Didn't like crush and break out above my breakout point with like a huge move. No, not really. So I'm kind of looking for that follow through to come in, today or tomorrow type situation, but we'll see. That would be if it closes decently above that blue line, decently good week or a good end of the week, but we'll see how that goes. I need a decent move. I'm like a little bit skeptical on this one, to be honest with you, just because so look at the chart, right? It's been pretty clean to the upside. Same as BX, also pretty clean to the upside, right? Breaking these, pullback consolidations, nice move. Pullback consolidation, nice move. Consolidation, new. So it's like the reason why I'm a little bit skeptical, I didn't size as big as I would maybe normally size on these guys, is because the month so far has been pretty good. I'm on a 70+% win rate, which is not normal, and obviously know like that won't be maintainable long term. So I'm like, okay, we know the ebbs and flows of how this thing goes. And then also, at some point when you get continuous, breakouts, like the higher you go, the further you go along, the lower the chance that these breakouts continue to work. And so that's kind of how my brain works when I look at these things. But so far though, BX looks the best. I mean, BX looks pretty good. We'll see how it closes today, but it looks honestly really strong. I'm looking for a move up to 195. I think 200 is maybe more like a reasonable ballpark, psychological level. And then from this consolidation, I can see 200, but I want to make sure I'm out prior to that before any funny business, if that's the case. What's going on, Flippa? So, but you can see, like, if you watch the recaps on YouTube that I post, and I post some of them on TikTok, I don't know how often they get posted, to be honest with you. If they're like they're not up to necessarily like perfect timing. Like, I don't post them the second I make the trade, whereas on YouTube, I pretty much post within a day or two of the trade taking place or me closing the position out. So it's a little more accurate timing on YouTube. But when I post those recaps, I mean, you could go back and see them. Like, they're all there since August of 2023. Go back to last month. It was not a good month. You go to the monthly recaps, not a good month. I mean, there's a lot of things were not working. I maybe made a couple little mistakes, not even that bad, but just like the strategy just wasn't working that well. And taking that in and then seeing it, understanding it, knowing, okay, the election, does that have a play in it? Maybe it did. Maybe it didn't. I don't know. I mean, we'll have to see next election cycle when we get back to that time frame. If the same market conditions occur, I now have my ability to draw back on this election cycle, on how I'm trading the strategy. Will I be trading the same strategy then? I mean, maybe, probably. I think a variation of it, but probably. I don't see a reason to change it anytime soon. And I really don't see a reason to change it big picture anyway. Like, even if, we had, I guess the only situation maybe would be if we go into like a super tight consolidation in the markets for like years, which is possible. But like, even inside of that consolidation, like there's going to be moves up, moves down. If you just look at the S&P, You know, like if you go back, even go back in time, like, you know, go back years and years ago and you say, okay, well, obviously we're in a bull market, you know, pretty straightforward, very cool. Bear market, so you can play the downsides, cool. But if you go back like even further out and see more of a consolidation period, like, yeah, like this is a good period back in here from 2014 to about 2016. That's a 2-year span. But if you zoom in on that 2-year span, like we didn't really do much, kind of consolidated, but like we had trending environment, choppy environment, trending environment, choppy, and then trending. So there's, you know, a good couple of months inside that 2-year span that probably would make, you know, your entire year if you're handling and managing things, you know, well. So that's the whole idea. Like even in a situation like that, yeah, maybe it'd be boring. There'd be less setups probably, but doesn't mean that you can't take advantage when we do trend. And it's just going to be, you know, comes with the market. Like that comes with the whole thing. And, you know, you gotta be aware of that. And if you go back to, you know, late 90s to 2000s, like you could say this was a period of time where the market didn't do much. Well, it did. Look at these massive moves. Huge trending environment, huge trend. Like there wasn't a lot of consolidation. This is a weekly chart, by the way. So that's crazy. And then you got to go back. You can go back even further. You know, you probably, this would be the more interesting time frame to look at. We'll be back in the 60s and 70s, like this right here, you know? And it's the same thing. It's like, well, there was a trending environment, trending, little chop, little trend, chop, trend, chop, little trend. Like, so there's still opportunities, right? And even in the course of a decade and a half time, that's like, you know, there's going to be years in there that are going to be great. There's going to be years maybe aren't as good. That's just kind of how I think this, the game works. And what ends up happening is that when you try to play the game like, well, let me change my whole approach because we are now choppy versus trending versus this, you end up confusing yourself on what to do, and versus like you could just kind of gas pedal down when we have the environment you like that fits you, and then ease up when we don't. This is the S&P I'm looking at right now, at least. Peter, you too. Happy Thanksgiving, my friend. I will be probably streaming a good bit. I mean, we got tomorrow. But yeah, if I don't see you, man, hope you have a great holiday as well. But yeah, the plan is to probably stream every day. I try to stream either in the morning or in the afternoon. Usually Monday, Wednesday, Friday, it's Power Hour, the afternoon session. Overall market forecasting. Yeah, no, I mean, that's the thing. Like, I think now, of course, forecasting versus what's happening, like, you know, obviously we can project things, but you don't know what's going to happen next. It's just it's more about identifying, right, what you're experiencing right now and stuff. And so that's what I think is more important. Like if we jump over to SPY really quick and see like what it's doing right now, like is this like big picture? Yes, we are trending. Here's our big gap to fill potentially to the downside. I'm watching to see. We technically filled this gap down from a couple of days ago, from Friday into Monday, or no, sorry, that was Thursday into Friday of last week. So we filled that, so we can kind of draw this in and say, yep, we filled that today. Not maybe the best, maybe the way we would have thought, but we filled it. So cool, that's done. This one's the glaring one that we have yet to fill. Will we fill it? We may not. You know, but so far that's what I'm watching in terms of downside. If we do see downside, I think down towards 577, 576 could be an interesting spot on SPY, but we're at 590 right now. Still got a good way to go to get there if we're going to get there. And sitting at the top of the week's range so far, which is, you think, a positive thing. We'll see. But yeah, like in this, like, okay, we're in a trending environment, you know. Is it super parabolic? No, right now, but it's trending. It's a little choppy trending. Like it's like, you know, choppy trending, but it's trending. APID. Is that an actual ticker or no? APLD. Applied to digital. Let's see. That looks pretty good, dude. Not gonna lie. Volume is coming in past couple months, which is nice. Let's jump to the weekly time frame. Yeah, I mean, she's starting to push up. You'd want to see, like, I think it's struggling to break above this 960 area. That is a good spot. Once we can break that, oof. Because, I mean, volume-wise, this is where we've been consolidating for so long. Above here, there's open waters. Like, yeah, you've got this zone. Yep, absolutely. But there's some more open waters, I think. There's just volume-wise, most of the volume's really come in the past year and a half anyway. So once this breaks, this is a good spot to be looking at. So really above 950 to 10 is like, could be a nice spot. It's based on the chart. Let's check the other ETFs. Here's DIA. Let's jump into a daily on it. It's bouncing up decently off the lows of the week. IWM, so small caps, decent bounce as well. Pretty much filled the gap. Well, we were talking about this before. You know, choppy as hell, this chart. Like, this is crazy chop, but this was kind of your general area, your general vicinity of, like, you know, we were struggling to break above that. We finally did after the election. Now we back test it. Do we bounce and go? Or are we going to get a little bounce here and then we're going to roll over and then boom? Like, that's the question still to be answered, right? So that's what my head looks at on IWM. Jets ETF, look, that's the airline sector for anyone who didn't know. Pretty strong, but they've been crushing, generally speaking. I mean, it's been more like the big ones. Like United's been crushing. I think Delta and United have been crushing. Everybody else is not as strong at all. But I mean, I think you can see it. I saw a video yesterday. It was funny. It was like, I don't know if anyone saw that video too. It was like vibes in the Denver airport. And it was like the budget airline like terminal. And it was like a shit show, people everywhere and stuff. And then it was like the more premium airlines, not premium, but like the other airlines terminals, quiet, chill. Not too bad. Let's see, anything else looks interesting here. Like I said on TLT, I think you still have a pretty. I mean, if you have money to park, and you're like, I don't know what to do with this money, but I want to park it and put it somewhere. I mean, CLT is probably not a bad spot. You get paid a decent dividend, and then also, I mean, chances that this goes up versus substantially higher versus substantially lower, I think are better than 50-50 that this goes up versus down over the next couple of years. We're talking years, I'm not talking like tomorrow, but we're talking big picture. That's my take based off of rates. Massive move down on biotechs. I think this is going to be a little tricky sector to think about because generally speaking, you look at biotechs and you go, oh yeah, biotechs during when markets are pushing, yeah, biotechs are great, but they're kind of like that risk-on asset class. But with what's going on from the new administration, the biotech healthcare sector kind of sketching me out. Maybe there'd be a lot of things ripped upside down on that in that space. That's what I would say is a little bit concerning, you know, about biotechs. So it's like, I don't know. If you're confident in buying the dip, then maybe, but I don't know. Energy's doing really, really well. Oil is bouncing up. That's helping a bit. XLF, here's the financial sector. I'm in a financial, I guess, sector play or a stock. Once that chart, like the ETF, like the stock I'm in chart looks actually quite similar to this, except it already broke out. So it's my chart sitting like up here. So that's just showing me relative strength. So it's like the sector in general is strong, awesome. And then the stock that I chose to trade is even stronger based off this chart. If you overlay the two, is even stronger because it's breaking out to new highs right now compared to the ETF, which is generally a good thing. But then again, there's no guarantee this could just roll over and then I can get, you know, false breakout, boom, or back to the downside. That's always the risk you play when you play breakouts, though. I would much rather play the strength versus the weakness any day when you're playing breakouts. If you're playing dip buys, different story. Maybe there's a reason to play the weakness versus, you know, because you're going to get a better deal, right? XLU utilities. Okay, cool. XLV. This is the healthcare ETF. So if you broaden this chart out, I think, yeah, this one kind of broke out of its range because it was in this range for a while. Broke out of the range. Now it's back testing the top of that pretty much. So you just extend this over to the side. Yeah, like right here, you'd want to see maybe a bounce, maybe. If not, But then again, like we were saying, just, you know, from the administration, you know, could be an interesting, you know, game to play. Sold all my XBI before the dump due to the 10-year. Okay, well, there you go. That was kind of a signal or two for you. Yeah, it's probably. I mean, I see the idea. I see the XBI approach because like it's an ETF. Like chances are that any substantial dips inside of here, you'll probably want to buy long term. Will probably go higher. Time horizon, who knows? Years probably you're looking at. So any big reactions, big dumps, not terrible. It would be interesting to see though if this stays really weak. If the market keeps going up, does this stay weak? And go down. That would be what I would say. It's like, well, what happens there? Or can that happen? The retail ETF, I think, is like continuing to get closer and closer and closer to that spot of like where it wants to just pop off. So we're waiting on that. I think there could be some retail stocks inside of that ETF, which I guess we should look at really quick. Let me look at that. XRT Holdings. Carvana. I remember we looked at this before, but Carvana's number one in there in terms of the biggest weight. So let's just look at some of these charts. Because it's always good to kind of see when you look at these ETFs that are on the verge of big breakouts, are the underlying or the stocks inside of them also looking pretty good? Look at Carvana, by the way. Crazy move back, crazy recovery on this. I mean, that's charts similar right there too. You kind of have, this is like a breakout point right here. I'll put an alert. I don't think I would trade this, but we'll see how the chart looks when we break. This one that it broke right here, that had a nice move. Very nice move. Okay, so there's Carvana, Bath and Body Works, BBWI. Is that really a chart here? Well, that's not a good chart. Just weaker, Lithium Motors, LAD. That don't really... Haven't heard too much about this stock. But hey, look at that. Strong. Not that I would trade that, but pretty strong. American Eagle, AEO. I'm sure a lot of us have heard that one before. That stock sucks. It's just getting crushed. SIG. Some of these, I'm looking at this ETF, but these are all small weights, relatively speaking. So, this is a jewelry company, apparently. Signet Jewelers. MNRO. Monroe Inc. No, so this is like this kind of a Warby Parker. GameStop has got a decent weight in there. Dillard's, I remember I've played Dillard's before. Let's go through the rest of these here really quick. WRBY. Oh, that's been crushing. Holy shit. Very, very well. But not tradable for me. GME. You know what I was thinking about was, especially with the meme cryptos kind of pushing, as I think we see a lot in these comments here. Could we see a run in the meme stocks as well? You're kind of already seeing a decent move where GameStop is up 40% from where it was a few weeks ago. So they have earnings coming up not next week, week after that. So I'd be sketched out. So I wouldn't trade that. But even if there was a perfect setup, DDS is Dillard's, I think. Yeah, DDS. Dillard's could be good. Let's see. No. And then Victoria's Secret, VSCO. Let's see. That would be so funny, though. Trade recap, making $700 trading Victoria's Secret. I could see it now, but no setup there. So, sometimes, you just want to just check them out. Funny enough, dude, Coinbase is down 6% today, interestingly enough. Huh. MSTR also, well, that's up. It was up even more. Holy shit. Crushing move, man, on MSTR. Killer. But surprisingly, that Bitcoin's up 2.5% on the day, yet Coinbase is down, funny enough. Who would have saw that coming? Not me. Yeah, S&P and the Nasdaq are red. The Dow is up a little bit, and the Russell's up 0.7. So yeah, better strength than the Russell. All right, let's check in on my current holdings here. Damn, BX. Hey. Are we going to get 190 today? Maybe we get a push to 190 today? Let's go, baby. It's up 2%. Be like that. In a market that's kind of not really giving us a good sign of like up or down right now. CCL is up 1%. That's not as strong. My view on these was kind of like, if one of the two works, I'm over the moon. Awesome. Because I'll make more on the winning trade than the losing trade. So it was kind of like those, like, they do look good. I just kind of feel skeptical behind them. Now, of course, none of them have worked yet, so we're not there. But I was skeptical because, I mean, we're getting up there, right? Like, how many more times are we going to get these kind of consolidation breakouts that are going to keep working? Maybe it will. I don't know. I will keep playing them. But the more that we keep getting them, the lower the chance that they will end up continuing to just work that clean without making it be a bigger picture drawdown or a bigger picture consolidation for some time, So that was where my head was at. But hey, if one of them works, obviously if both work, cool. But if one of them works and the other doesn't, I mean, that's fine with me. I'm happy with that. That's how my head works. Definitely jump into MSTR, dude. You crushed on that. That one, to be honest with you, man, I completely just like, not that I disregarded it, I just didn't really think too much about it. Looking back, though, would I have gotten my setup? No. I mean, I haven't seen it here. Now, I guess if you broaden the picture out, bigger picture, go to the weekly, maybe go to the monthly. Yeah, I would. Yeah, I mean, on the monthly, yeah, I got my setup. But am I going to play a monthly swing like that? I mean, probably not. But then again, dude, it went 100%. So it's like, fuck. Let's say that I played that on the monthly. I'm just going to do the math here. I enter it at like 207, and I stop under breaking candle low, which would have been a great stop point, 156, give or take. Then a 2-to-1 risk reward would have been 313. Obviously, we crushed that. This is gone for approximately 6.5 to 1 from that point. Now, of course, would you capitalize the whole way? No, I would not. I'd be trimming at a minimum or I would be all out, on that. But at some point, would have worked though. Just the time would have been, you've been sitting in that for a little bit longer than I would normally. But I don't really give a shit when you're playing shares. I don't give it doesn't matter because you don't have to worry about a time expiration. So it's like, okay, who cares? Like when this is something that I've thought about more, and as I've gone away from options, it becomes much more realistic where you can look at some of these charts and say, yeah, like I'll absolutely sit in this trade on the weekly time frame and hold this for, 2 weeks, 3 weeks, a month if I have to, if the setup works. Like, yeah, I would. Why not? But whereas when you're playing options, I tend to shy away from that. So, but yeah, overall though, I think we're coming down a bit. Yeah, S&P is coming down a bit. Go to the 5-minute. Well, yeah, actually. More than a bit, kind of low a day here. We got a nice consolidation in this area. This is your spot right here to see if it breaks down on SPY. Or I guess I'm looking at futures, but SPY would be the same general idea. If I go back out past couple of days, you pretty much can, if you zoom this bad boy out, you're pretty much like the whole range is intact. I mean, it's been kind of shit. It's generally speaking where you're looking. So you're coming towards the bottom of that range. Would you be looking at more of a buy here potentially, I guess, based off this, rough, window. But at the same time, maybe she wants to break that here soon. Oh yeah, I forgot this morning we had some catalysts as well, right? We had jobless claims came in a little bit lower than the estimates, I think it looks like. Tomorrow is PMI data at 9:45, which I hate 9:45 data. Just like, why? Just put it before the market or, whatever, but they don't. So there's that. TA requests, sure, yeah. But I will not, there's no point in charting out random meme coins because the charts are going to be quite similar, and also there's only so much data you can look at. So random meme coins I will not chart. A, because they're not even going to be on TradingView, and I'm not going to be pulling up different stuff for the reality is like it's a pump and dump. So it's like charting doesn't really make sense. When you got more data behind it, yeah, it makes more sense. Like when you have like something like, okay, Doge, which technically you can say is a meme coin, but also it's like kind of isn't at the same time. There's more to be had here because when you go to the bigger time frames, you just got more data. This thing goes back years and years and years now. So it's like you can look at this thing and say, yeah, Doge, honestly, I think could be setting up, and as I'm saying it, let me zoom in here. Could be setting up really nice if we get this consolidation to extend a bit more and then start putting pressure on the high. Like, oh man, I mean, up in there could be really good for a breakout in the coming days and weeks. Perfect situation though. Huge move up, good volume, then just let it consolidate. Once we break that consolidation, absolutely a play. Now, broaden it out. Where does that line you up with? Probably lines you up with going to all-time highs. Let me just pull up this versus the dollar. Let's see. Come on. Yeah, there it is. Loaded. Yeah, so you're not that far from that high. Well, the data doesn't go back far enough. Fuck. You, Coinbase, you piece of fucking... No. Okay, let's see. Can we get better data on this? Binance. Yes, Binance. Yeah, so the highs are going to be up here at like 76 cents. So a decent shot in my eyes if we have a consolidation here with the move we just got. If we have a consolidation in here and then we break that consolidation, I mean, I would say absolutely in play for all-time highs. That would actually probably be where I would target if I traded it, which I could. Maybe I would. I would target all-time highs or just shy of that. So I'd probably target like 69 cents for fun, like literally not even, I say for fun, but also, you got to manage the risk. So it's like, where would your stop be? Does 69 cents make sense for your stop? Yes, no, maybe if in this case, like, let's say you get even if you put your stop loss at the bottom of the consolidation, say it breaks out above, 45 cents, stop loss, bottom of the consolidation. Let's say you put the stop loss at 34, and then you target 69. That would be a 2-to-1 anyway. So yeah, 69 makes sense. 74 cents just before the all-time highs would be a 2.5-to-1. So totally very valid trades. I think those are valid trades. Could be good. Now again, that's if we get a continuation of this consolidation for a bit more and then nice breakout to the upside. So that's what I'd want to see on it to trade it. How much does TikTok pay me for streaming? None. I literally have made $0 on TikTok. I've never made a cent on TikTok. But I stream on YouTube as well. YouTube maybe makes a few bucks. Like literally a few bucks a month from streaming. Like that's it. I mentioned this in the video watch yesterday. How you stop? Oh yeah, the prop firm Surge Trader. Yeah, they just went under. They allowed you to trade stocks initially from like back about a year ago. I think I opened the account with them, and then I did, and I was halfway to the target to get funded, and then they just eliminated stocks from their tradable assets, and I was like, yo, I now don't trade anything else on your tradable asset list, so fuck you. Can you give me like a refund or whatever? It kind of sucks. And they were like, no, yes, no, and then eventually no, and then yes, and then they gave it to me. But yeah, so that's why. And now there's a prop firm out there that's like caters to. There's actually a couple now that cater to stocks only, so you can utilize those or use your own money. Go on fund an account, go on margin and use margin, and you can have a pretty good size, or go offshore brokerage and use margin. Boom. There's ways around it if you have a smaller account size because you're limited, I guess, in the U.S. for accounts under 25K. You can't day trade more than 3 times. Now, I don't really day trade, so I don't think it actually would be a problem anymore, to be honest. So like I totally wouldn't be opposed to funding an account with less than 25K of my own funds and then just trading it like I would swing trade wise because I don't care. Like it doesn't matter. I'm not day trading. So would I ever hit the 3 per week? Maybe I would trade. Maybe sometimes I'd enter and then it would, not close how I want it to close. And so I would stop out, take a day trade on that, which is possible. Maybe, but that happens maybe here and there. So would I hit the 3 per week? Probably not. So it's not really a big deal, I guess, if you have less than 25K. But yeah, it's just, Doge right now, dude, honestly, I wouldn't say that it's it's not a bad spot. If it starts to break down under 34, 35 cents, and start to fail 30, then you start coming down in here, not going to be a great look. But then at the same time, does that mean the bull market's over and this won't go to highs? No. So it's got to be up to you in that play. The thing is, if you got in now, different story. If you were in and you were holding it from down in here, you're up nicely. So it's nothing. I always say in these situations, if you're up, what's wrong with taking a piece of the profits off the table, to minimize your emotional reactions. Can we get tax and profits? Yeah, I mean, it just depends upon how and where you make the profits. So if it's in an IRA account, different story. No, you will not get taxed. If it's in which most people are not trading in IRA, although you could. If you're trading in your individual account or crypto account, doesn't matter. If you're making money, you technically have to report it. If it's in these random places, maybe it's easier to hide, although you could be, prosecuted, I guess, one day for that. Will they come after somebody who made $2,000? Probably not. Will they come after somebody who makes $20, $30, $40, $100, $200,000? Probably at some point, so that's the whole thing. But yeah, if you are trading on a brokerage account, normally in stocks or just even crypto, like Coinbase or whatever, I think they send you, your documentation at the end of the year, your tax files, your tax information, whatever form it's called. I forget the number with the W, this, that form. They send that to you and then you file it with your taxes. If you hold positions for less than a year, it's short-term capital gains, which is taxed at whatever your tax rate is. So if you make $80K a year and then from your job, and then you make an additional $20K a year from, your trading income, and that was inside of less than a year, you held positions for less than a year to make that $20K, well, then now you made $100,000 that year and you're taxed as if you made $100,000. Now, it's the whole bracket. So you're taxed X% from 0 to 50K. And then from what you make above 50 to 60, whatever the numbers are, the tax brackets are, you just get taxed at whatever those rates are. But if you hold for over a year, you have the long-term capital gains tax rates, which are lower and they're different. And I believe if you're making under a certain number of dollars per year, your long-term capital gains tax rate is either 0 or very, very low. But then if you make certain amounts of money a certain amount of dollars per year, you pay a little bit more in long-term capital gains. So it just depends. But yeah, you got to pay taxes. Unless you live in Puerto Rico or something, then I guess you don't. But in the U.S., yeah. I don't know about other countries. I don't know how the tax laws work everywhere, but in the U.S., that's the deal. It's not that bad. If you trade futures, futures is a 60-40 rule. I forget which one it is. I think it's 60% tax at short-term capital gains or long-term capital gains and 40% tax. Either way. So it's almost half of your if you day trade futures, technically speaking, you're taking short-term gains, right? Let's say you make a lot of money, you day trade futures and you make a lot of money on short-term gains. I believe only either 60 or 40%. I forget the number. We can look it up. 60, 40 futures tax rate. I mean, why would I don't want the calculator. What is it? Positions held for any amount of time will receive a 60% long-term capital gains treatment and 40% short-term. So that's pretty freaking cool. So if you trade futures, let's say the S&P futures right here, we're looking at, if you only trade that and the NASDAQ, whatever, and you make $100,000 a year, if you do so. By the way, let's just talk about that really quick. The percentage of people who are actually doing that, extremely small, super small, because most don't make money, A. Those who do make money, there's a lot of people in that ballpark of those who do make money don't make $100,000 a year. They're less than that. And then, so that's the tiny, 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 tiny percent that are 100,000 plus a year. You're talking about a fraction and fraction of these percentages. So people who consistently do that. But let's say you do 60% long-term capital gains, which would be a lower tax rate than what would your other 40% be. So that's pretty good. So there's an incentive to futures over options or over shares. But then again, it's like, don't think that if, let's just say that you trade, you see that and you're like, oh, I need to trade futures. Well, like, okay, if you can't trade futures consistently, then why would you do it? Like if you're making money doing shares or options and you go to futures and you lose, it's like, well, do it to works, like don't worry about the taxes. Just do it works. The taxes, it is what it is. Just, that's how I say it. Jit Mooning, mentor. I had in the past, people in the past, but nothing now. I don't look at any, I have signed up for every Discord there was. I did all that stuff. I paid a lot of money for monthly subscriptions for Discords and stuff years ago. Back in 2019, I think, or 2018, I think I bought my first. No, it was 2019, I think I bought my first course. 2018, I think I was, I don't know, maybe I was interested, but I was like, I didn't really care that much. And then 2020, I took it more seriously. Obviously, market was going great. All right, 2019, I took it more seriously. Market started pushing crazy. 2020, great, cool. And then 2022 or early 2023 is when I think I was like, there's no need for anybody to tell me what to do or to influence me at all. So I started cutting off all the influence from others and stuff. Unfollowing, not looking at social media, not looking at the Twitter trading space, not looking at anything Discord wise. Like I just did my own thing since then. So it's been like it's almost been 2 years of that. Raygun. Indicators that are best for futures. Honestly, dude, it completely depends. Do you train or mentor beginners? Let me use the indicators. I'll answer the indicator idea first. I don't. Well, actually, it's simple. I do not train or mentor anybody. I don't want to. I don't do it. I don't think I'm even qualified to do it, to be honest with you. I feel like I'm definitely not. So that's like not something I want to do. Not something I'm interested in doing. Years ago, I made. Back in 2021. I made technical analysis videos for another guy on YouTube who has a pretty decent following. I haven't, to be honest, checked too closely as of late what he's up to, but we collaborated. He asked me to make technical analysis videos. He put that into a course format. But it's just technical analysis. It doesn't really like, oh, here's how you trade. No, it's just technicals. Like how do you, look at charts and stuff? How do you draw this? How do you see this and stuff? So the reality that I've come to learn over time is that stuff, while it is important, so if you are brand new, like, it could be useful because you can learn that faster in the course format and stuff, but that's just like a tiny, tiny piece to the puzzle of what trading actually is. And once you kind of figure out your strategy and this and that, then it becomes a different game. It's more of a mental game. So to be honest, if one day I ever got to a level where I was so successful in my own stuff that I didn't care about my own shit anymore, and I was so much more interested in giving back or helping other people, then it would be much more like if I ever did that, it would be so much more of a psychology focused situation than a technical analysis entry, this, that. That's irrelevant, to be honest. It's relevant initially, and then the game is just all psychology. And then how you manage risk and how you think about managing risk. It's not about how I manage risk on this situation. It's how do you manage risk big picture, which plays into your psychology, So, but yeah, indicator wise, kind of going off the technical stuff, good to learn basics. What's this? What's that? And then try it for yourself. The whole idea behind it is use it, try it, and then see what you like. I've done it all. I did the VWAP, I did the EMAs, the moving averages, the volume this, Bollinger Bands, RSI. I never got into Fibonacci, to be honest with you. I never did. But I did all of that. And then I came to the realization all I need is some volume, candlesticks. So volume's already there pretty much. I added the volume profile on the right-hand side, which is essentially a different variation of this down here. Candlesticks, and then my own lines and my own analysis. That's it. That's all I needed for me. For somebody else, you can use 10 indicators and the way that they line up, and then if you just keep that consistent, and then that equals an entry and an exit here, entry here, could work. I'm not saying it can't. What ended up happening to me was that I would do that, And the next thing you know, I was looking at 17 indicators on my screen. They were conflicting in many situations. So it's like, well, now we're up, down, this, that. And I was like, well, I don't care. Well, I don't care. Like, how do I determine if it's a long or a short here? Or is it a good trade? Is it not a good trade? Because I have 7 indicators and 4 of the 7 are saying yes, but the other ones are kind of like, I don't know. And when do you take it? Like, that was kind of my view. And I was like, it's just too much, too confusing. I didn't need that. That was the whole thing. But the psychology side, to be honest, though, the way I like start, and I by no means, I mean, I still deal with the problems there too. You never figure it out. It never really is. The psychology side, like, I learned a lot from Mark Douglas. I looked into that deeply, and then as I just played, people had, here's a funny story too. So Mark Douglas, if anyone knows, let me pull it up if you're familiar. Mark Douglas, this guy who wrote the book Trading in the Zone, you probably know who this guy is. He wrote the book Trading in the Zone and The Disciplined Trader. He had a couple books, I think. I read Trading in the Zone. This is the book. I read Trading in the Zone back in, I don't know what year it was, but this is the book. So he writes that book, and then he had seminars on YouTube. So, well, he didn't. So people would he had seminars. He died. I forget what year he died, unfortunately. But he would do these seminars, and he would essentially be like workshops. So you'd pay, I don't know how many $1,000 to go, or $1,000, whatever the number was. And you'd go to a live workshop for a couple of days. I think it was a multi-day event. And he would do these lessons on trading psychology. And he would teach you trading psychology. And he would teach hedge fund managers. He'd teach the average everyday guy. Whoever wants to go, whoever would pay, he'd do it. And then they were recorded. And so then they got sent out, I think, in video format, in like CD format. So you can buy that off his website. They somehow made their way onto YouTube, and people posted them. And then I would listen and watch those all, I would go on like a morning walk. Back when I was in Austin, I would walk up off of 6th Street and up straight north towards UT, like kind of halfway between UT campus and then like 6th Street was where I would walk sometimes. And I would just listen in the morning, like for like 45 minutes to an hour of these like recordings, and just like drill in the psychology into my head. And it started to finally click, because I'd be going on these walks and it would be like, oh, fuck, like that makes sense. And I'd write like a note down on my phone, and then it would start to make sense. I didn't apply it very, very well initially, but over time, I've come to apply it a lot better, and it just makes so much more sense now. The problem is that his wife, I think it was his wife, she went on a copyright, spree, and she would claim copyright and everything. So obviously those recordings probably shouldn't have been out, right? Someone probably put them up illegally, I would assume. Is what it is. They're gone now. But if you make any videos with Mark Douglas in the name, she would come out, or she would claim copyright on your video. So you could say, concepts of trading psychology influenced by Mark Douglas. She'd copyright strike you. And then that's like a whole thing with YouTube. So YouTube you get a copyright strike, they take the video down. You're like, oh, what the fuck? Why? And then you're like, did I do something illegal? And they're like, I don't think so, but I don't have lawyers. Then she would threaten you, email you, call you. She emailed and called me because I had a video where I took 5 of the biggest 5 concepts from that book, the book, by the way, not the fucking seminars, the book. And I said, here are my favorite concepts that made the most sense, that click with me the most, essentially, in my own words. Can't copyright that, not illegal, totally fine. She takes that video down, and I was like, yo, fuck you. This is not illegal. Fuck you. Threatening me. I have XYZ lawyers. I will take you to the cleaners. Like, I have all the emails. Like, they were like threats. I was like, fucking Jesus Christ. Like, I don't want to go to fucking court over some dumb shit like this. But I appealed it. So, like, when you appeal it on YouTube, you go into this whole thing where if you appeal it, they have 10 days to then take legal action. So when I appeal the copyright strike, YouTube says, hey, it is now out of our hands. Like, we can't protect you, this, that. Like, you can be sued now. Like, you are asking to be sued, and if you are in the wrong, you can and will be sued by them. So I was like, well, we're just going to see what happens. I'm like, I don't think I did anything wrong here. Legally, don't believe so. Don't have a lawyer. Would have to get one if she wanted to sue me, I guess, because I didn't do anything wrong. I'm not going to get fucking sued for nothing like that. That's so freaking dumb. It's more of a concept than a dollar perspective. I wasn't making money, like much money at all. Like, it wasn't like I was taking money. I linked up the book in the description. Like, I was actually probably sending them more sales than not. So I was like, well, fuck this. Then she never replied. She called me. She texted me, because it gives you my information. The person who claims copyright, they get my information once I appeal it. Texted, called. I was like, not answering. She was a psychotic freaking person, seemed like. And then just she never actually took legal action. So I was like, threatening people like that is kind of fucked too. So, but that's what she's been doing, so it kind of rubs me that when I hear the name, or I think the name Mark Douglas, man, it's like, oh, great. Cause he had some great points that whether the guy was good, not whether you think he was an amazing trader or not, I don't even know if he really traded. He was just a psychology guy. He taught people, how to think and think differently. That's all it is. Is it still? Yeah, if you look up Mark Douglas Trading Psychology, there's a couple videos. If not, I think my video or one of my videos that I summarized like 5 of the key points or something like that. 5 of the biggest takeaways from the book, I think, that made the biggest clicks for me. It should be up there. Well, not should be. It is. I know it is, because I made the video and then I was like, she copyright strikes me, and I put a clip up from a seminar that like I found on YouTube, which then got taken down. No audio, just a clip of it, like overlaying kind of like B-roll footage. And I was like, okay, maybe that's why I can get fucked. So I'll remake the video. I literally remade the video, made sure it was all my words, all my stuff. And then she still came after it again. But it's still up there. That was the video that I then had to appeal. And then after 10 days, it got reposted or it got re-uploaded because she didn't take legal action. Which is so funny though. So funny when you think about it. Best piece of advice to give yourself if you're starting today, probably would be pick one approach, one strategy, and track that for a year. As much as that might sound boring, pick one approach, because I didn't for a long time. Pick one approach and track that for an entire year. And then the data that you're going to get on the backside of that, your win rate, your average win-loss, the data that you'll get on the backside of that will be amazing. And then you can make adjustments from there, whether you win or lose. Because the way that people go is they end up wasting so much time because they try this strategy, that strategy, and ends up being up here. I've seen people who have the simple trend line strategy. I see everyone who goes, ICT changed my life. Then you see ICT can't trade for shit. So it's like, it's not about ICT or the trend line or retail concepts or smart money concepts, in my opinion. It's how you operate your strategy, how you see it. And then when you have opportunities to use discretion, which is your ability to make adjustments on the fly, how you do that over time. But you can't make or use discretion in trading until you like actually have enough time with one approach to then be able to move away from it. Because you could say, like I remember back in the days where I would come in, or there's a period of time I was consistently losing at this time. And I would come in and I would say, I'm going to go and I'm going to day trade today, or I'm going to dip buy today, or I'm going to play breakouts today because of what I saw in pre-market. And I was like, what ended up happening was I was jumping to different strategies, different approaches when the market just was like, I was trying to read the market every single day in a different way. Like that just didn't work. Like it just simply didn't work. And just looking at it one way, I'm able to, when I look at it one way, I'm able to say, okay, are we in a momentum environment, up or down? Right now it's up. Okay, cool. Is that environment giving us trending action or choppy action? I guess it's kind of the same question, but are we seeing consistency across different sectors? What sectors are relatively strong versus others? I'm able to kind of use those pieces to the puzzle to take the trades I take now, which is really the same. It's the same strategy. It's just Sometimes I'll change the sector because the sectors are, XYZ sector is relatively strong compared to this one. And that's all that changes now versus in the past. It was like I was changing all my shit up around every day. It was like, it's too much, man, too much. And it's not easy. And it's so much more mentally taxing when you think about that. When you imagine like coming into the market and saying, okay, I have no idea what the fuck is going to happen today. Let's try to figure it out. Like imagine the stress of doing that every single day or every week, whatever. Like that adds up. Whereas I just look for the same signs. And if we have them, cool, great. Then there's trades. If we don't, then there's no trades and that's it. All right. By the way, we're getting a lot of alerts. I got to see these alerts. I haven't checked them all. BKNG. Oh man, these are getting pretty juicy. Booking is another one. It is also kind of on the, I'll throw it on my green list here because it's worthwhile. I don't know if I would trade that, to be honest with you. Probably good. Let's check out how the other ones look. Here's the weekly. It's pretty strong though, which is good. Bring this out. Yeah, it's all, oh my God. Booking is going insane. All-time highs by 1 million. Jeez. All right, so shown the list. That's breaking out right now. USB, edging breakout pretty much. I'm already in a financial play, so I'll leave it alone. AMP, I think, is also a financial play. Fuck, that looks good. Shit. That looks good. When I say it's not a bad thing, it's just like now I have to make a decision. Do I want to play an additional financial stock? I'm already in one. That's halfway to my target. Do I want to play another one as well as it's now breaking out, which this one is not as strong clearly because the relative strength is in the other one. So that's the decision to make. It's 11 a.m. Eastern time. So I'm going to leave these alone and see how they close. Kind of like what I did on, I think, Tuesday. It was Tuesday when I got in on CCL and BX. It was the same thing. I just said, I'm going to leave these alone, see what happens by the end of the day. And we'll come back and see how these charts look. And a couple hours later, I came back. Charts still look pretty good, holding the breakouts. We got in, and we're in. That's it. Why not lean into bot trading? I am not opposed. The problem is that, as I've come to realize, it can work absolutely. I think, but there's a lot more that goes into it, I think, for it to really work really, really well for you. And I mean that because the market's going to change. So you could say, when I see XYZ criteria, do this. But how do you factor in like the vibe you're getting from the S&P or the overall markets? And how do you factor in pending news like an election or like earnings season? Like there's all these other pieces that have to get factored in that you don't really think about too much, but that does play a role into your decision-making process. And so you say to yourself, oh, okay, well, I'm just like, there's sometimes you'll get a setup that you're like, technically speaking, yes, but then it's like, at the same time, I just don't like what we have coming down the road. I'm going to sit this one out. Could be totally wrong, could work. I'm going to sit it out. And that's like your gut kind of like over time, you get that kind of gut feeling, but you get that from experience. Like, you get that through experience more and more, and it becomes more accurate throughout the more experience you get. So you can't, like, how do you quantify that? Now, most people, that's how they lose, right? But how do you quantify that in people who win? Like, that's what I kind of find is the problem with bots. It's like there is a human element that I think is part of why I go on winning streaks and losing streaks. And I think that when you have that element with the bot, I think you end up being much closer to just break even. I think, unless you are constantly having it tweaked and stuff, which is possible with AI, I guess, right? But I'm not so technical in that regard, to be honest, to do that. Catching a meme coin pump in here? No, unfortunately not. Good dip to invest in. On the topic of meme coins, I should say, talking about this yesterday, Doge, right? So for example, I'll just pull up Doge, and the idea that I was kind of throwing around was, I bought two. I bought three meme coins yesterday. Will I tell anybody? No, what they are, because the whole point is I don't want, like, well, it doesn't really matter. There's no, what is 5 people going to do? But at the end of the day, but the idea with like Doge and stuff, or just meme coins in general, what the whole point is, like, you want to look for the charts when they're doing this. Like, you want to be buying the meme coins when the charts are doing this. Okay? This is the chart you should be looking for. Okay? Not this. This is asking for trouble. Could it go higher? Yeah. But you missed out on 300% gains over the past couple of weeks already. So you want to look for charts like this. This is going to offer you a much better risk-reward profile, much better opportunity to win, and going to give you better gains, generally speaking. Now, the problem you have, here's the problem with meme coins in general. The problem is you and I might look at that and say, let's get in. Looks great. Nothing's happening. And it just flatlines for weeks and weeks and weeks. Why is that the case? Man, why is everybody else making money but I'm not? Because when a person with a large following tweets about it, makes a video on it, gets people going, you're going to attract attention. Oh, hey, now let's pump this. Like, or you get more people involved, more eyes, it pumps. So if we don't have that ability, and that's technically in some regard, or the way, if you do it the right or wrong way, I guess, it's illegal. If we don't have that ability to pump, or just to say, hey guys, I'm buying this. Don't buy it. Don't take my advice. Don't buy, like, to protect yourself legally. If we don't have that ability, then we're gonna be the ones buying it here or in here still when they bought it in here. You see what I'm saying? Like, don't be the dumbass and do this because you're gonna use. Well, you can make money. You could, if it keeps going, you can make money, but you dramatically increase your chances to lose money when you do that. Dramatically. So it's like, if I had a higher probability of losing money, why would I do that? When I can have a higher probability of making money doing this, or losing less, at least losing less. If I want to gamble, like that's just how my brain works. So take it as you wish. Interestingly enough, back to the stock world, Netflix, I didn't even realize, but we were looking at this one earlier. It was down, but now look at this thing. She's up 1.5% almost now. Whoo-wee. Damn, this thing just keeps going up. $900 is coming. How do you feel about Oracle? You mean the stock and all these other algos, or just algos in general? I'm not familiar. If you're talking about a non-stock, I'm not familiar. If you're talking about like an algorithm called Oracle, Arbitrum, I don't know. I do not know what Arbitrum is. Oracle's breaking out, by the way. That chart's been killing it. That stock's been killing it. Is that all-time highs? Yeah, crushing it. Dude, who would even thought of that would be a friggin' crazy move? But yeah, the idea is by end of day, do I want to get in AMP? Do I want to get in booking? I'll see how these charts both look by end of day, how volume comes in. That's the only thing. Those are the only two that are throwing me, or that have given me alert or given me breakouts today. Otherwise, we're sitting on BX, which is looking good. Target is we're about $4 away, $4.50 away from target, which is cool. CCL is making a nice stride here. Would like to see it closing nice and strong today. That would be cool. Could I enter these guys? The thought is actually funny because So the two positions that I'm in are travel and financials, two different sectors. Booking, is kind of that travel sector. It's technically called consumer services, but it's travel, right? Booking. So I would be entering an additional travel play, and then AMP is a financial play. So it'd be the same thing. What that's telling me is like those are the two sectors where you want to be looking right now, and that's where the strength is, clearly. Now, if you look around and say, okay, well, that's a strength, but, look at the S&P. I mean, compared to SPY, and you got even better strength here because relatively speaking, SPY is not even doing that well. Well, I guess it's doing decent today. It's up. If that continues, if SPY were to kind of push all-time highs in the coming, week or two, going to Thanksgiving, let's just say, boom. I mean, we could be looking at, if that gets a little bit of a tailwind for those plays, boom, awesome. Like those are great looks. So I think I might enter one of them, maybe both of them. I might even enter both of them. I might even go, because I'm already in travel and financial plays, I might enter them with a little bit smaller size and just play them. That's kind of how I think I'm going to go about it. Let me just pull up. I saw this really quickly yesterday from a guy that I follow on Twitter, which I don't really look at Twitter that much. I should probably go on it more often, to be honest with you. But the issue that I have is just like any other platform, the algorithm just fucks you up and then sucks you in and it just wastes your time. So that's the concern that I have with it. But either way, what's this? Yeah, he posted this yesterday. I'm not mistaken. I'll find it. He posted a shit ton. Jesus Christ. Yeah, here it is. So here it is. So weakness right around now is perfectly normal. The good news is I wouldn't give up on a late November rally. Essentially, historically speaking, the past 73 years, which is a good amount of data. The S&P on the 18th, 19th, and 20th of November generally comes down, and then it starts to kind of inch back up into the end of the month. So this is the weakest. Now, this is a strong month in general, but this is the weakest time of the strongest or one of the strongest months of the year. So today is the 21st, and the market's up. If we start to if seasonality or this, historical data makes any sense or pans out to any degree, then, next couple of days probably be good, strong, and then maybe we get an all-time high here into end of year or into end of month, honestly. So that would bode pretty well for the new trade or ideas, right? Because they're relatively strong. They're breaking out right now. S&P not at all-time highs. Those breaking out. S&P, if it does kind of round the corner and make a push to all-time highs in the coming days, you would think would be a nice tailwind for the stocks already breaking out. Boom, hit your targets, walk away as we hit all-time highs, walk away, look for the next setups, and that's it. That's kind of the way I think about it, About to pump 10K into choke up. Oracle has an algorithm for stocks they're pushing. Interesting. Nothing against that. I mean, could be good. The problem that I have, or the interesting thing about algorithms to me, it's like, well, not a problem. They're that's the future. I think the way things are probably going to go is going to be, instead of us like clicking buttons and taking trades, I think we'll be just adjusting our algorithms or adjusting our own algorithms that trade for us. I think, and that we're not going to have to do anything. I think that's where the world's going. How fast we get there, I don't know, but that seems like that's where we're going. As I think back to Booking, I'm pretty sure Booking was a stock that I made money on a while ago that did pretty well, if I'm not mistaken. Let me see if I go back in time. Was it here? No. I forget where I traded that. Oh, maybe it was back in here. I think it was back in May, June. I think it was this move right here. That was the move back in May, June that I took on Booking. You can go back on my YouTube channel and look at the trade recaps and then find when those were, because it's definitely there. Maybe I can find. I can actually confirm that really quick. BKNG, 620, 523. So end of May into June. Yeah, that was the time frame. So I got in initially. I think I got a little fake out right here on the first little pop, breaking this level. And then I re-entered it in mid-June, and then it worked. Made more money on the win than the loss. Cool. The sizing, and that's funny. The sizing in that was, I think I lost. Let me go back and see. Back then, which is funny because I guess that's not that crazy. That's similar sizing. I just increased it by like 2.5 times that. Yeah. Losing 90 on the booking trade, then I made 132 on the win. But then I was looking back and like, that seems kind of small because now when I win, I make like 400 plus. And now when I lose like 250-ish, depending upon the situation, obviously. So, but so far on this, and that was back in May. So you think about that, right? Sizing has gone up decently already, and I still feel like it's not that big of a deal, or it's not that substantial. That's the other piece too, and that's just for everyday like trades. It's not for whatever. Yeah, that looks pretty good. The volume is a little bit sus there, but the volume tends to come in on the end of the day for booking. So volume is not crazy. AMP, let's see the volume on this. Yeah, I'd want to see this thing closing a little bit stronger than where it is right now for me to get in there. Bookings chart looks a lot better, so that would be the best chart there. Well, actually, not even that. I mean, it's like, yeah, it does look good, but not as clean. So we'll see. We'll watch both of those. I don't need to get into either of them. I really don't. So we have 2 other positions that we're sitting in right now that are doing just fine. So we'll let those ride out and go from there. But with that said, I'm going to dip. I'm going to wrap things up. Should be back for a stream on Friday, tomorrow for Power Hour, last hour of the day. Stay tuned for that. Sub the YouTube. Follow the TikTok if you want. Up to you. I stream on both. So they both are streaming live at the same time. And I'll see you guys next time. Have a great rest of your